Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about an auto ancillary play that is one of the renowned companies in the battery division, Exide Industries, and why it is struggling and what you need to do in the stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Exide Industry, it was established in 1947 and they provide automobile batteries both for four-wheelers and two-wheelers. They also provide batteries for, you would say, heavy commercial vehicles, etc. It is a marquee brand in auto ancillary and top client. They have top clients and strong retail appeal. So they have clients like Maruti, etc. Plus, they also provide industrial batteries, UPS batteries, which are very popular. Exide tubular batteries for inverters are very popular among retailers here in, say, in the city areas and in high urban cities. Plus, they also provide solar batteries. The market cap of the company is 16,300 crores, and it has prominent global presence as well, where they supply their batteries across Asia and other parts of the world as well. About the numbers, well, as with all auto ancillary companies, as with the other auto companies, the numbers have dropped over the last 1 year. If you have seen that September FY20 numbers compared to September FY19, we have a drop in sales of over 3%. We have a profit drop of over 11%. Uh, they also paid a lower tax of around 15.6% instead of, I think, 25-26%. So one needs to take that into account, that even with lower tax base they had a profit decline of 11%. Otherwise they should have had a profitability or a positive profitability, or you could say a gain in profitability rather than a decline. The net profit margins have declined from double digit to single digits, and operating profit margin has also come down to close to double digit at 10.6%. So, what are the reasons for disappointment? And this has been pretty well laid out during my presentations on Ashok Leyland, on Maruti, etc. That the global auto slowdown and also has also hit Exide badly. Apart from that, the domestic sales slump of four-wheelers has really hurt the battery companies or other auto ancillary firms, especially the battery firms, because it is quite obvious that the number of batteries that are sold are proportional to the number of cars that are being sold in India. And we have seen a 40% decline in total car sales over the last 1 year. So there was no way that Exide could have gotten away with better numbers than what it has shown right now. But apart from the numbers, we have to look at where the stock lies at the moment, and what kind of valuation it has, which I'll discuss later on in this presentation. Apart from the slowdown in the domestic car sales, we have had raw material cost which has accelerated for Exide. I was looking at their balance sheet as well as their profit and loss account, and the raw material cost has gone up by 50 to 60%, which could be primarily because of the carbon black pricing going up, as well as because of other raw material pricing going up, as the metal industry has shown a recovery and so on and so forth, whereas the sales of their major product has not gone up, and hence profitability has declined sharply. The margins have shrank. As I said, they had a net profit margin of 13-14% easily about couple of years back. Right now they have a net profit margin of less than 10%. And they have a strong competition from Amara Raja, which has come up with very good numbers as well compared to Exide. And when the Exide numbers came out, the stock ran up. But everybody was apprehensive about Amara Raja, but later on Amara Raja also came up with a very good set of numbers, and I'll put up a video on Amara Raja in the next few days, for sure. Um Everybody who is written as comments on my previous videos is talking about, most of the people are talking about, for me to give a little bit of idea about the technicals of each company that I brought to you. So I'll try to do that as and when possible. As far as Exide is concerned, the stock is not trading at 52-week highs. It is below its 200 DMA. Right now it is trading around 190, 195 rupees. Looks weak on charts, because I believe that any stock that is below its 200 DMA is a very weak on a short term, that means 2 to 3 months chart, and hence one needs to avoid for short term trading in such a stock. It is down 55% from the peak that it had in 2 years back, which was around 390, 398. There is strong resistance around the 200 rupee level, and there's strong support between 168 to 175. So if the stock drops from here for any reason by about 20 rupees or so, 18, 20, 25 rupees from here, 15% from here, because of any news or because another set of numbers going bad, and so on and so forth, if the index falls a bit and the stock also falls, then it is a very good opportunity to buy around those 175 to 165 levels. Otherwise one needs to avoid at these levels. Intraday, if you want to trade, and which I'll never suggest, so my personal opinion is do not trade into it intraday or any stock intraday, but the intraday support lies around 186 levels. So for the fundamental call, my call for long term is you can buy over the next 18 months to 24 months gradually on any fall. As I said, around 175, 180 buy. If it goes beyond 205, 208, then you buy, and so on so forth. So buy on every 5% decline, keep on buying, adding on to your positions every month. This is a marquee stock. This is not a bad stock to buy in terms of auto ancillary. This is of the pedigree of Motherson Sumi. This is of the pedigree of other auto ancillary companies which are regarded pretty good. Do not see fast recovery in the stock, so I don't see the price recovering very quickly over the next 1 year at least. So keep buying and let the sector recover, and then you'll make a big amount of money after two years or so, because I feel it will take around 1.5 to 2 years for the mojo to come back into the complete auto sector. uh, and only buy 5% of your total portfolio. Do not invest more than 5% of your total investment, so that if this goes wrong, then you'll still have 95% with you. So this was my video on Exide Industries. Please like and subscribe my channel, hit the bell icon so that you can get my video straight away when I post it. Another thing is I'm going to come up with another live chat with you all people on Sunday around 4 p.m. So kindly stay tuned for that as well. Thanks a lot for watching.